Hi there, fellow investors. It's 28 March today, Sunday, and what I would like to do today with you is try a new approach. As many of you know that are following my blog, I'm writing every week a 5-bullet Sunday post. I've done this already more than 60 weeks, and lately I've been experiencing more with videos, and I have a feeling that I actually could do this content from the Sundays better in video format. It makes it easier for me, but I also feel like I could explain my my thoughts more to you. So consider this a pilot today. I'm not sure yet if I would like to do this next Sunday again, because I'm really waiting for some feedback for you on this. If it doesn't work out, I'll continue writing them on Sunday, but if this as your preference and my preference, I might shift the 5-bullet Sunday post to video format, to YouTube. Having said that, what I will discuss with you today is quite briefly about how to spot a stock in a turnaround and whether it's a good turnaround. I will zoom in a little bit on Philips and the recent news around it. I also zoom a little bit into what's happening in China and Nike, and of course you can always expect this with proper data behind it. And last but not least, I will also talk about my smackdown from this week between Abbvie and Pfizer. Having said that, if you haven't seen it yet, this week I was also creating some content again. I've created this week a post in which I explain how to average down on stocks when share prices are falling. It's for me a typical topic which is really hard because there is also psychology at play. I actually find it easier to average down than to average up. So if you're interested in this topic, check out my post. I describe the 5 steps that I'm considering in my average down strategy, and yeah, I think it might be helpful for anyone that struggles, specifically when we are experiencing a market crash or something like that, which we saw last March. Besides that, we have also published this weekend the latest Dividend Talk podcast. If you are not aware about this podcast yet, check it out. We are recording it almost every Friday evening, and we release it every weekend then. And this time we're talking specifically about the Intel Unleashed event, and we also address more than 10 or a dozen of questions again. Last but not least, I also wrote a guest post for Jung in Rente. It's one of those blogs that I follow. It's in German, but I speak some German, so for me it's not an issue to read his blog. And I shared to his readers 4 attractive European dividend stocks. So if you're interested in which those are, check it out as well. To all this content, I will put the links in the description below of this YouTube video. Okay, so let's get started. How to actually recognize a stock that is going through a turnaround and whether the turnaround is actually effective. So for that, I would like to refer to an article on LinkedIn which I really enjoyed, and this article writes about 7 elements of successful business turnarounds strategies. And it starts explaining a little bit how, for instance, if a company is becoming insolvent, how the legal process works and such. But what the takeaway for me here is like, if we talk about turnarounds, there are 7 criteria, 7 steps, and I would like to quickly run them through you a little bit. So the first one is about crisis management. For me, this really means like acknowledgement that there is a crisis. What I will do soon, I will share to you 3 stocks that I think are currently in a turnaround, and I'll also reflect on whether they are really having this awareness. And crisis management means like there are no, holy grails anymore, or no taboos anymore. I guess that's the word that I'm looking for. And a CEO should really have the feeling and sense of urgency to really change things quickly. But also that new management is coming in, so changing a CEO with new thoughts that is probably better in crisis management than the former CEO that led to the point where it is now. What is really important here is to have also excellent stakeholder communication. So when you're in a crisis, when your company is, let's say, deteriorating in its fundamentals, you really need to communicate well about, but also involve your competitors or your people in the companies in supply chain to really turn the ship around, because there are dependencies there. And those companies should not assume that those are necessarily competitors that want them to die. And I will show an example of that later as well. Of course, strategic review, they really should have a plan forward and how they want to turn the ship around. Because if there's no clear strategy behind it, then you could really wonder, okay, what's in it for this company? Of course, the culture and the operational changes, again, how they got there in the past might be their bottleneck into the future. And there's a term also called active inertia that usually means that companies are aware and people in those companies are aware that they need to change, but they do it with old processes that were successful in the past. But if you now think, for instance, about going from a legacy business into the cloud, you need a total different approach to this. Hence, those approaches from the past just don't work anymore. And this means then also that you really critically need to improve your processes and really rethink how you're executing those processes. Last but not least, often those companies will have a lot of debt in this situation because otherwise they wouldn't be in trouble. So it is also really about refinancing and reducing debt. So let's have a look at three companies. I would like to compare both Intel, IBM and AT&T with you, which I think are all trying to turn around at the moment. So what I've done here is I've put all those 7 elements in a table and I compared the 3 companies that I just mentioned. And if you think about crisis management here, I definitely have a feeling that both Intel and IBM are understanding they're in a crisis. I think for IBM it's obvious. They have been declining, I think, revenues now for over a decade probably, and their earnings have more than halved over that time. So what IBM started to do is they started off to spin off their legacy business, their managed services business, into a new entity. And we will hear later this year about what it really means for them. But when I then think about AT&T, I don't necessarily feel that they feel there's a crisis. I rather see that they are aware that changes need to happen because they are late in the streaming wars, but I don't get that sense of urgency from them, and yeah, that's why I rated them lower. And again, all these are my opinions; they are a bit arbitrary, but I just want to reflect a little bit on with you on this to show you also where I think the real turnaround place could be successful. When I think about new management, then I think Intel, this Pat, I'm really impressed with him. He's an engineer that came in, and way better than Bob Swan from that point of view. He knows really what he's talking about. And in the recent Intel Unleashed, I will show us soon a little clip of that. You can see also his passion and his excitement around that. But when I then think about Arvind from IBM, for me, he is really the internal technocrat, promoted internally. And I mean, I sometimes have a feeling that the former CEO, Romati, selected him so that she would look good. I can't get anything better out of it. And I feel poor for the guy because he seems to be a really friendly guy. But when I look at him, I really, there's, and specifically also on stakeholder communication, next line, as you can see, he just scores really poorly there for me. Also from AT&T, I think his name is Tenki. I'm quite impressed with him. He's not sitting quiet. He's actually quite active in trying to how you say it, to not walk around the bushes, or how do you say it in English, but he's really active in also selling DirecTV as an example. He doesn't sit still there and really trying to turn this company around. But when it comes to stakeholder communication, and if we look at the Intel Unleashed last week, it was just mind-blowing. I really loved also that Satya Nadella chipped in there. He really spoke about the importance of having Intel as a domestic manufacturer for the chips that Microsoft needs as a foundry business. I think this just shows how well Pat has connected, how he reached out to them, and how much goodwill he is actually creating for those companies as supply chain to keep and continue doing business with Intel. I think that's really great. He's not afraid. He doesn't see that as competition. He sees it more as an ecosystem. I can see that. I can tell that. And from that point of view, I also think Intel has the best strategic review at the moment. So they acknowledge that they are not anymore having the market dominance, that they can decide how the supply chain looks like. No, that has shifted now to the big players like Intel, Apple, just because Intel was not to Microsoft and Apple, just because Intel was not innovative enough anymore. They were not able to get to lead in the 7 nanometer and the 5 nanometer space. That is now with their competition with TSMC and AMD, and they are lagging there. So they need time to catch up on that, to become in the leading position again. And for that reason, I think it's really good that they started foundry business. When I think about IBM and AT&T, yes, they have their strategics. It looks generally good, although at IBM again, I think they're floating a little bit. They don't really know where to go to. They have got too many, stakes in too many businesses, or not businesses, and markets where I really struggle a little bit to see what they really want to achieve there. I think their consultancy business is quite well. So from that point of view, I still gave them a plus. But again, when it comes to culture and operational changes, IBM together, and it's slightly connected to the new management, no, it's just not there. I just don't see it here. Last but not least, I think when it comes to financial restructuring, I think AT&T is doing best here. They sold off DirecTV. They took a sunk cost approach, so they lost probably 40-50 billion on this deal compared to their acquisition price. But this is good. Just sell it and start paying off the debt. It's painful, but don't let those past decisions be dragging you on by postponing the decisions you need to make today. And this is the concept of sunk cost, and this is really what I like about AT&T and what they've done there. So in my opinion, Intel is really the best turnaround play here. I don't like them at these prices. I think they're at all-time highs, so I would like to see them definitely like a third down from where it is right now. Maybe we get this opportunity again. But Intel for me is the best one, then AT&T and IBM. I really stay away from it until management wakes up there and really starts to see that they are in crisis and really need to turn things around. I'm afraid that it will not happen with this CEO, so we'll probably need to wait for a new CEO that comes to really clean things up there. Having said that, I'll show you now a brief 1-minute fragment about Pat Gelsinger, I think it is, from Intel Unleashed, to just show you how communication looks like when you're in the middle of a turnaround and want to convince your stakeholders to work with them.
We have already received enormous enthusiasm and statements of support from across the industry, including Amazon, Cisco, Ericsson, Google, IBM, IMEC, Microsoft, Qualcomm, and so many more great names. And to give you a firsthand perspective, I'm super excited to welcome a very special customer, friend, and long-term Intel partner, Microsoft CEO, Satya Nadella.
Hello, thank you so much, Pat, for that warm welcome. It's an honor to be here with you at Intel Unleashed.
So I think you, when you just saw this, I think you get what I mean. Look at the enthusiasm between the CEO of Intel and the CEO of Microsoft. This just shows that they are committed to each other. And I believe if you see that Microsoft is such a growing business with their cloud services and everything, and also the compute, I see a lot of goodwill there, which really helps Intel probably with the required cash flow in the future, while at the same time they get the time to get back their innovative edge. So to sum it up, yeah, this is how I look at spotting a good turnaround or a bad turnaround. And for me, the clear one that is having the mojo now is Intel, and IBM definitely not. I hope you find this useful. So let's get to the next topic then. Some news caught my attention. That is Philips finally divested their appliance business, and they have done this for $4.4 billion US to Hill House. And I really like this sale because it's a sale, and I will show you here in their press release. They've sold it for $3 billion in the third quarter, or 3.7 in total, but $3 billion will be acknowledged in the third quarter. And on top of that, they have a licensing deal for $700 million, a 15-year licensing deal. So this means the Philips brand will stay around, and he'll gets to now, I would say, produce still this equipment and such for us, those home appliances. And I like this a lot because they have done the same with the television business unit. They spun it off also like what was it, 7-8 years ago, and at the time they also did a licensing deal. And this is nice because they keep getting the royalties for the brand, which I think is additional cash flow, which hardly comes at any cost. So I think this is a good deal. I like these kinds of deals because cash flow is secured over the upcoming 15 years. You could argue it's maybe not that much, but every little bit helps here. It's better than getting nothing at all. So what I like as well, because due to this sale, also its risk profile of Philips reduces. Because one of the things that I had in my analysis that I did a while ago was that their debt was still on the large end when you would do your discounted cash flow calculation. But imagine now that they would use this money to pay down their debt, and let's say they get their debt down to 3 billion. That would be a significant impact because their cash flow is around, 1.3 billion per year. And if you then look at my article here, where I was writing about Philips, you can see that their debt was increasing here quite significantly over the last years, also because of the acquisitions. And getting it back to the 4 billion level, let's say, will be really a good thing for the company. Because also in that case, you will see that if I go to my cash flow calculation, if I would take a 4 billion debt here, it would really raise the price to 30 to 35 euros straight away, just purely on the discounted cash flow. And it would also, when comparing it with the with the discounted cash flow model and such, or the dividend discount model, would go to 39 euro. It will probably go up again. Well, at the same time, we saw that the share price has been increasing already. It ran ahead a little bit, so it's now 48 euros. I find it way too expensive from that point of view. Also, the dividend was frozen this year. They do that more often. But hey, if it comes to the low 40s, I will definitely give it a deeper watch again and to reconsider it again. I find it a good divestment. And yeah, Philips is now the main competitor for Medtronic, as an example, because it's a pure health tech play now. So I would say General Electric, Medtronic, it will be really nice to see the three of you battling out this space going forward. Okay, so the next topic then, I want to talk a little bit about what's happening in China. And on the political level, I will not go too deeply, but what we saw last week is that Nike suddenly dropped 5% in share price. And the reason for that was that, I said, China is one of the biggest growth areas for Nike. Literally, I will show it you soon in the numbers. And what started to happen is that they had a statement, not even recently, but already a few months ago, about that they don't allow these practices in Xinjiang, I believe. It's around the cotton industry and having slave labor by the Uyghurs. So Nike put out a statement, but then just last week it got really social media backlash because 30 social media influencers, one of the bigger in China, they started to end their contracts with companies like Nike. And as you can see here, they're actively wearing their Nike shoes as well. And you know, this is a big thing because if this really takes off, I said, within the youth there that are these potential future customers, and that they get we get this Western anti-sentiment, let's say, then this is not good for looking for those companies. And why it's not looking good in that case? Because let's look at the latest quarterly three numbers that Nike just published. Look at North America compared to last year. Yeah, and this was still when when COVID didn't impact. Generally, the total in North America was declining with 10% compared to last year. Europe, Middle East, and Africa 4%. But look at China, 51%. It became within 1 year the third largest business unit. It was already, but I mean, it's now really closely competing to the EMEA, and it's also quickly climbing up to North America. So if you then look at the bottom line numbers, they grew last year because China grew with 700 million in a quarter. Now, this is where we have the issue. If this growth stops, then Nike is not a growth story anymore. And this is the fundamental issue, and it doesn't deserve such multiples anymore, because Nike is really, really highly priced at the moment as a company with their multiples. So, I mean, invest with care here on Nike, because if this really starts to come into the numbers and it is something to stay, we will have significant issues with Nike. But for me, that's an opportunity, because I like the company as such. I think it's a strong brand, but I would need to see the price being cut by 50% almost, the current share price. And it's not Nike anymore now. It's also the other companies like Adidas, H&M. They're all being impacted at the moment. For the companies itself, I hope it will be a short-term issue that just flies over in the upcoming month. But in this case, I would say wait for the next quarterly earnings reports and see what the bottom line number impact is. We don't need to be a hero right now. Okay, so for the last topic then, I would like to share a little bit my smackdown between Abbvie and Pfizer. So let's get into that. So I chose Abbvie versus Pfizer because one of my loyal followers called Piotr recommended this one. So I felt like, it's a good one. I didn't do yet Big Pharma, and Abbvie and Pfizer are nice yielding stocks. So let's compare them. So as you can see, Abbvie here is a 4.91% dividend yield and Pfizer 4.3%. Although Abbvie has a bit of a better payout ratio when it comes to the free cash flow, around 54%, and Pfizer is on the high end with 74%. I really like to prefer to see below 60%. I could even see for a stable company below 70%, but 74% is for me a bit on the high end, because it means there's not so much wiggle room to grow, and Abbvie is still having a lot of sales from their major drug, which is about to expire, I think, in the upcoming 2-3 years. But for now, they have great cash flow, and what I also like because of that, they just purchased Allergan, so they have been also purchasing the Botox company for a pretty fair price, and also this cash flow again, additional cash flow, allows them to secure their future profits and cash flow also. So I think they are doing really clever acquisitions. Well, Pfizer at the moment has been struggling for the last 5 years. They also divested a little bit. Share price went nowhere. So from that point of view, Abbvie, when it comes to the earnings power at the moment, I like it a bit more. And we see that also back in the dividend growth track record, because Abbvie has been growing their dividend with 18% over the last 5 years, and Pfizer around 6.3%. So it just shows where the room for growth was so far. There's a little catch here to the dividend history, because Abbvie is mentioning 9 years, but we should not forget that it's a spin-off from Abbott. So with that, it is really a dividend king with over 50 years of dividend growth. But hey, Abbvie is not Abbott anymore. Abbvie is a company on its own, so hence why I chose this number. But it's probably good to be reminded about. Pfizer's dividend history is also not bad with 11 years. However, generally I like to see more than 13 years, because that would mean that it has also proven to run well during the great financial recession back in 2008 and 2009. Well, where the coin flips a little bit is when it comes to the balance sheet. Abbvie's balance sheet looks bad from that point of view, lots of debt on it. And they really need to use those cash flows now to start paying it down. This should have all their priority, because I will soon show Pfizer's balance sheet looks so much better, and we can actually really nicely compare the two balance sheets. Also, let's quickly look a little bit at the value creation. Here again, Abbvie has so much so much debt to look after, and compared to Pfizer, that also, their return on invested capital and such, with the profits they were generating, is just low, and hence they were just able to produce a return on capital slightly above their discount rate, weighted average cost of capital. Well, Pfizer does do a lot better here. So from a value creation point of view and value metric, Pfizer and the balance sheet looks much better. So it's really like, do you go for future cash flow potential plus dividend growth based on past performance, or is the balance sheet more important for you? Those are really the two trade-offs here. I cannot choose for you. It really depends on your risk tolerance. I own some Abbvie, to be how I said, fully transparent on that, but I bought them in the 60-70 range, so I've got already a full position in it, and it was deeply undervalued for me at that time. If I would need to make a choice now, I would therefore rather consider Pfizer, more for the diversification. But yeah, before I close out this video, I wanted to quickly also show you then the balance sheet difference, because I think you deserve a little bit of factual proof here. So what makes comparing these two balance sheets really easy is because they have approximately the same value of total assets on their balance sheet. So it's 150 billion, I believe, versus 155 billion. We will see that soon. But just look here. If we look at Abbvie at the moment, and based on their latest 10K, they have a long-term debt of 77.5 billion and other long-term liabilities of 27 billion and a half. So we're talking here about 105 billion in liabilities. And then if we look at their stockholder equity, it's a meager 13 billion. This is not a lot. If we now go to, by the way, before I go there, you can see the Elegant acquisition really added up to the balance sheet, and the balance sheet increased with 60 billion. And I mean, I really like this acquisition once again, and I'm happy that they didn't pay too much in goodwill from that perspective compared to what we see sometimes with other acquisitions. So if we then go to Pfizer, you see 154 billion. They divested a bit, and that's what you can see here. It's the 13 billion here. But now look at their balance sheet. So when we look at their long-term debt, it's 37 billion. And if we look at, how I said, other non-current liabilities, around 6.7 billion. And then if we look at their total equity, it's 63 billion. So this balance sheet looks like much better from that point of view. And I think it is just a much stronger balance sheet than Abbvie at the moment. So this was it from my point of view for today. And yeah, now I'm really curious. Please give me some feedback. Do you like these kinds of videos? Would you like to see this, my 5 Bullet Sunday series in video format going forward? Or do you rather prefer the textual version on my blog? It's now the chance to give me this feedback. Having said that, if you also like to see more of this, more videos in general, also stock analysis, then please subscribe to the YouTube channel. I've been growing well lately, so thank you for everyone who's supporting me. I'm feeling much more confident that I will reach 1,000 subscribers by the end of the year. And yeah, as I mentioned more often, I love all of your engagement. It really makes me, how you say it, very motivated to keep on pushing out content and sharing the knowledge that I have, but at the same time really learning a lot from your comments as well. On my blog, on social media, on Twitter, and on this channel. So for now, have a great Sunday. Enjoy it. It's lovely weather outside. So I'm definitely going to do it myself. And for the Formula 1 fans under us, good luck today. I really hope that we see a strong battle between Max Verstappen and Lewis Hamilton tonight. Okay, have a good day. Cheers.